Kitco Mining special coverage of BMO's 33rd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.
Ecuador is bouncing back. This is Paul Harris for Kitco Mining at the BMO Metals, Mining and Critical Minerals Conference in Hollywood, Florida. And joining me today is Daniel Earle, President and CEO of Solaris Resources. Daniel, welcome to Kitco.
Thanks for having me. Pleasure to be here.
What a great start of the year for the company. You got a 130 million Canadian investment, strategic investment from Zijin Mining, one of the world's biggest mining companies. And this will help you fund your Warintza project in Ecuador through pre-feasibility. How important is this investment for you?
Well, it holds the potential to be nothing short of transformational for the business. It allows us to get much more aggressive in terms of our pursuit of our vision for the potential of not just the Warintza project and the cluster of porphyries that are only partially reflected in our resource base, but certainly in the discoveries and the targets around it. But then in terms of the entire district opportunity that we have, we feel that there's potential here. If we're able to bring it all together and we've got the funding to be able to go out and do the exploration, make the discoveries, drill the resources that are available to us to define one of the best inventories from a grade and tonnage perspective, and then at a capital cost where you could bring on production in this district in Ecuador at anywhere from a half to a third of the cost of the competing jurisdictions. And I think that combination represents the opportunity for one of the best greenfield projects in the entire industry. And so that's what the Zijin transaction provides the funding to pursue for us. And so, as I say, it represents a transformational opportunity for the company.
In previous conversations we have had, Daniel, you've spoken about, you've met with lots of corporates and you've received a pretty good idea of what they want to see before there's potentially an offer made for Solaris in terms of, they want a PFS, they don't want a feasibility, those kind of things. How is that shaping how you're developing and advancing on the PFS?
Well, I think generally you're right. A pre-feasibility study represents the technical de-risking that needs to occur. I think going further to a definitive feasibility study is important if you want to try and finance the project into construction. But for majors looking at this as an acquisition opportunity, it's not value added for them. They'd like to produce their own definitive feasibility study and then obviously their own detailed engineering before embarking on construction. And that's better left to them, of course. So the pre-feasibility study is really the important part of the technical de-risking that we need to do. But in addition to that, the other main elements of risk for any greenfield project would be on the regulatory side and on the social side. And those are other areas that we're attacking as well. So in terms of the social license for the project, we have an impact and benefits agreement in place with our host communities. We're in the process now of updating that impact and benefits agreement. And that's something that we'll hope to deliver, at the PDAC conference next week. And that would represent an impact and benefits agreement that covers the expanded scope of the project. But in addition to that, as part of our ESG mandate, we want to bring on board the rest of the indigenous government architecture in Ecuador as part of the support base for this project. And so look forward to an announcement on that front as well. So that would be, the social license for the project. The regulatory de-risking is essentially the permitting of the project. And so we've done a lot of work in terms of environmental baseline studies and so on, working with the consultants that are available in Ecuador, working with the Ministry of Environment on the project, actually embedding technical professionals from the Ministry of Environment in the project so that they have a real experience in terms of understanding what the project is and what it represents. And we're embarking now on our environmental impact assessment. That's something that we're hoping to submit in the second half of this year, and then look forward to the further permitting of the project in 2025 around the pre-feasibility study and so on. And that basic program of de-risking the project was funded by the transaction in December. So we're fully funded through our next resource estimate, the environmental impact assessment, the pre-feasibility study in 25, and then the completion of permitting towards the end of 25 going into 26 on the funding that we put in place in December, even before we get to the Zijin transaction in January.
Many companies talk about wanting to get a greater copper presence or greater copper participation, but few, if any, are deploying cash like Zijin has done in order to get that. Given that there's not that many sizable copper development stage projects out there, does that show a lack of imagination?
Well, I don't know. I don't know if I want to go that far and kind of criticizing the peers in my industry. But look, I think that the reality for the copper sector is that there are a number of challenges. I think the most kind of acute and constraining factor in terms of bringing on new copper supplies is on capital costs. Okay, so capital costs continue to trend higher, which they've done for decades. And we're now at a point where the capital intensity of bringing on new production. So in the United States, for example, if you look at Freeport's recent disclosure on their Baghdad expansion, this is a brownfield project, obviously. The capital intensity of bringing on a new ton of copper production in that project is $35,000. Okay, and if that was a greenfield project, you can imagine that it would be even higher. So this is real disclosure, not feasibility study disclosure from juniors, which you have to take with a massive grain of salt. That's representative of the cost structure in the United States. Chile is in a similar place. You can see that in the actual costs of, for example, the QB2 project under Teck. Peru would be in a better position, but still somewhere around $25,000 a ton. You see that in Anglo's numbers for Quellaveco. Ecuador is in the fortunate position because it's a US dollar economy, low-cost labor, low-cost power, well-developed infrastructure on the power grid, the highways, the bulk ports for export, low elevation, freely available fresh water. They're in the fortunate position that capital intensities in Ecuador are under $15,000 a ton. And where this plays through is in terms of the sanctioning decisions for these construction projects to bring on new production. And if you're above $17,000 a ton now, you need to assume a long-term copper price that's above the consensus, which is currently $3.75 copper. And there are a lot of management teams that are going to go out to their shareholders and tell them that they're assuming and deploying capital based on assumption that the copper price is going to be materially higher than the current consensus. That's really the challenge in copper. That's what's constraining supply of copper.
One of the ways the industry has historically tackled that is joint development projects. And here I'm thinking of things like Collahuasi, where you've got three major diversifieds that are the shareholders there. Escondida, similar. Do you see more shared development going forward, given that some of the capital intensity is getting very, very high?
Absolutely. It could certainly be the case. I mean, it could even be the case that you have Chinese companies cooperating with Western companies. Wouldn't that be interesting? If you look at one of the most successful developments in the copper industry, it's exactly that proposition. Zijin's signature investment for Kamoa-Kakula and DRC was a partnership with a Western company, where they went on to create something like $30 billion of value on a 100% basis. So, yeah, I think there are opportunities for cooperation. It probably, as you said, requires a bit more imagination than we've seen from the sector in the first place, because the hard constraint, again, is around capital, access to capital, and then deploying that capital in an efficient way, which is acceptable to boards and, ultimately the shareholders that they answer to.
Let's talk more about Ecuador. You've mentioned some of the advantages that the country has from, let's say, a technical perspective, an infrastructure perspective, but let's talk a little bit more about the political government aspect. It seems the current government of Ecuador under President Noboa is really getting behind mining. It's issuing permits, it's clarifying the rules from progressing from exploration stage to development stage. And I believe it's sending a delegation of ministers to the PDAC next week, and potentially even the president himself will be there. What have investors here at BMO been asking you about Ecuador? What are their concerns?
Well, I think in Ecuador, it's not just this president, but you've got, basically 10 years of history now in Ecuador, where originally under a socialist government, you have the reforms to facilitate the opening of the mining sector. This is Rafael Correa in 2014. And then his successor, Moreno, maintained that same policy posture towards the mining sector, which was favorable. And that gave way to the Lasso government, which is a conservative government in 2021 that brought in some, tax reforms and some investment reforms that were helpful for us. We've actually embedded those tax incentives in an investment contract, which provides additional guarantees around the security of the asset. Ultimately, the undoing which we often see of conservative governments in Latin America, is their political rigidity and that ideology being out of step with the needs of, kind of an emerging market economy and population. And so that government, they were never able to achieve the kind of popularity that Noboa has. Noboa is sitting at a 90% approval rating, which makes him one of the most popular, presidents in the entire Americas. And that gives him, and that's really the area to focus on and to be optimistic about Noboa. It's that ability to take policy, which pro-mining policy, but then actually translate it into governance, into the reforms that you're talking about, into the new legislation and so on, which is going to aid the next wave of development in the country. And so, he's a great ambassador for the sector. He's, Western educated, dynamic, presentable figure. I can confirm that he is coming to PDAC, in fact, and he's going to be bringing the key parts of his cabinet, and he's going to be communicating the message directly to investors, to industry, and to their government counterparts that Ecuador desperately needs mining investment. It's a critical sector for the country as part of their overall kind of economic recovery that they're trying to deliver.
Excellent. Well, I look forward to hearing him there. In terms of Solaris, where do you want the company to be by the end of the year?
Well, what we funded, through the financing in December is a baseline program of the next stage of growth for the asset, which we'll deliver in a resource update in Q2. This represents 2 years of drilling that we've done from the initial resource estimate, which came in at about 1.5 billion tons at 0.5%, with a higher grade starter component embedded in that. So 2 years of additional work is going to be reflected in that resource update that's coming in Q2. And we'll keep drilling throughout the year. And so that baseline program will continue from there for another resource update in 2025 that'll go together with the pre-feasibility study, and then the regulatory de-risking program alongside that, which is the environmental impact assessment in Q3, and then the continuation of the permitting process beyond that. And so that's what we position ourselves to do. With the Zijin transaction, if we can close that, and we're hoping to close that early in Q2, then that'll position us for a great expansion in terms of the efforts to grow and add value to this asset.
Well, I wish you the best of luck there, Daniel, and look forward to hearing about the new resource as and when that comes out. Thank you very much for joining us today.
Thanks for having me.
And this is Paul Harris for Kitco Mining, the BMO Metals Mining and Critical Minerals event. And if you like what you see, don't forget to subscribe.
Kitco Mining special coverage of BMO's 33rd Global Metals, Mining and Critical Minerals Conference is brought to you by First Majestic Silver.